Thanks for joining in. We are decoding the impact of Budget 2023, and the focus right now is on taxes. The taxes that impact you directly. Of course, we've seen a fair amount of changes come through and a lot of chatter around the new income tax regime, the old regime, the new regime, the default regime. If you're confused, don't worry, because we have you covered. Let me introduce my panel of guests, the experts we have on the show. We have, of course, to help us understand the whole taxation math, two tax experts. We have Rajiv Dimri joining in from KPMG. We have Pallavi Vakru joining in from Grant Thornton Bharat. And of course, how does this impact our wealth, our investments, savings? Now, that's the most important question. And to answer that, we have Ashish Shanker of Motilal Oswal Private Wealth. And we also have with us Feroz Aziz of Anand Rathi Private Wealth. Thank you very much, lady and gentlemen, for joining in. So lots of excitement and plenty of announcements. And I think, I want to start off with by getting your first thoughts on whether this budget did what everybody was hoping, that is, put more money in the hands of the common taxpayer. So has that happened or not, Feroz?
Yes, Surabhi, it has definitely happened. I actually, on your channel, saw Shireen saying it's a 3C budget. I would say there are two more Cs, which is clarity and consistency. That's from a personal tax standpoint. Not tweaking the old regime. For example, it's consistency. If there would have been any tweak there, I would be disappointed that you're not being consistent, that you want to move everyone there. And there was clarity, right? There was no change in the capital gain tax. One arbitrage on the MLD side was plugged it was a very fine arbitrage, which has been plugged very meticulously with great intelligence.
So market-linked debentures.
Yeah.
Feroz, we'll throw up these names. Thankfully, I'd read that in the annexures. But yes, we'll get to that and more details in just a bit. Let me quickly take some thoughts from the rest of our panel as well. Rajiv, so what was sort of the big headline for you when it comes to taxation? Direct taxes is what we're looking at now.
So, nobody expected any increase in the tax rates given the run-up, of the tax collections month on month. There was certainly expectations of some relief. If you look at the big headline, the summary is that 35,000 crores is the revenue foregone on account of both direct and indirect taxes. I think it's been a while since, a lot of changes happened in the personal income tax, which I'm glad has happened. There is redefinition of realignment of the slabs. There's some reduction right up to the top level where 42% is coming down to 39 and also at the lower level. So I think all in all, yes, I think the star attraction from a tax perspective in this budget is the personal individual tax. And I'm sure we'll get into details of that. But pretty much trying to create a feel-good factor, which some people might think that is it because this is the election budget. I also believe that given the tax, increase in growth in the tax collection, this was a reward that was highly due to the taxpaying community.
Okay, well, I think everybody will have to get down with their calculators and figure out how much they save, if any at all. But Pallavi, I know it's an unfair question. I'm sure you haven't done that for either yourself or clients as of now. But just your sense that the thing is that there is standard deduction under this new default regime. But, there's still no ATD. There's still no exemption or deductions on, let's say, the home loan that I have or the medical insurance that I need to purchase. So do you think more people will switch? That was the whole idea, to get more people to switch from the old regime to the new regime.
I think that is the reason why, they have, in fact, introduced standard deduction. If you remember, the regime earlier never even had a provision of standard deduction. And that was the whole ethos, that there should be no deductions and it should be a very plain and simple way of calculating. I think all this is being done to incentivize people, whether it's salaried people or pensioners. There is this whole push to get people to come into the new regime. But like you rightly said, everybody will have to do their own calculations to see, does it really make sense for them, and then opt. The good thing about it is that at least for salaried people, they can elect on a year-on-year basis whether they want to go under the old scheme or the new scheme. So I guess everybody will have to do like you said, take out their calculators and do a little bit of math to see what really works for them.
Sure. Ashish, let me get your first thoughts in. Just from a wealth perspective, sort of what are the headlines for you? And are you a happier person or is it pretty much status quo?
No, I think so, Surabhi, it was a very realistic budget. It delivered on all the expectations that we had before the budget. So first of all, they didn't tinker with capital gains tax. That's a big one. There's always chatter before the budget that they might touch capital gains. Secondly, they've plugged some loopholes for HNIs and ultra HNIs like the MLD taxation, the market-linked debenture. They've plugged the tax loophole on insurance. And at the same time, they've also given some relief by reducing the surcharge. So I think it was a very well thought out budget, very intelligent budget, I would say. Lastly, but not the least, indirectly, this will impact all investors, is that they've walked the path of fiscal consolidation. So they've clearly laid out a path to get to 4.5% fiscal deficit, which is very, very positive because it keeps the yields under check. The government has a huge borrowing program next year. So all in all, I would think that, they've delivered on all fronts. That is capex, consumption, fiscal consolidation, and, this will spur growth, I think. So overall, good budget. I'm happy with it.
Okay, got that. Since both of you have raised this, issue of the market-linked debentures and how the tax is changed, let me just sort of read from the annexures. The income from market-linked debentures is proposed to be taxed as short-term capital gains at applicable rates. Rajiv, you want to comment on this? How do you interpret this, and sort of how does it change the playing field, if at all?
I mean, the larger theme, whether we call, I don't know whether it is appropriate to call some of these were loopholes or some of the things that emerge as market practice, that there are various alternate forms of investment that had come in. And the key difference in thought process in the new regime and old regime is that old regime, the rates were lower, but there were hosts of exemptions and concessions. And if you do this, you get this much, benefit. And the idea of the new regime, which is part of the tax policy, is that you earn a flat income and you pay a flat tax. And that's what is supposed to be the best tax regime, where there are no concessions and no exemptions. The path to that will require cleaning out all of these things. So whether it is the insurance policy, endowment scheme, which also, if the exemption is not available, that income will be treated as short-term, because the minute it is income from other source or short-term gains, it gets no deductions. There are no, set-offs that I can do, and therefore it gets taxed at the maximum marginal rate. So the idea, larger philosophy, is that whatever were alternate guise, if it was a investment guised as insurance, or if it was investment guised as loan but linked to the market, then it should get back to its true character and get taxed as either short-term capital gain or income from other source. That's the larger philosophy. Is this the last of the debate? This debate will continue. We will go back to the fine print. There will be inclusion and exclusions. All of that will happen. But the larger scheme and the larger thought process, I think, is along the path that we all have agreed as a good tax policy for the country.
Sure. I think you touched probably the most contentious aspect of the budget, which is taxation of insurance policies. And we know that for non-ULIP policies, basically the traditional plans, there's going to be an element of tax for policies which people are buying after the 1st of April, if the premium is in excess of 5 lakh rupees. Just want to sort of take your thoughts on this, Pallavi, as well. How do you interpret it? I think Rajiv just mentioned that the income that I'm earning from the insurer, is that going to be taxed as, as part of my taxable income, or will it be taxed as a capital gain? Because ultimately this income is arising from instruments that are invested in the market.
So, I mean, first, I'll probably add a little more color on the MLDs. It's very interesting to note, and then I'll pick up the sort of the insurance piece as well. Since there was no clarity, MLDs were actually being treated as equity-oriented instruments, and people were only paying tax at the rate of 10%. And I think that's where they've changed the thought process to say that this is debt and will be taxed at, like short-term capital gains. Now, coming to insurance, I think it was mentioned earlier as well that it's targeted more towards the high net worth individuals who are using, insurance policies which had a very significant premium, and the sort of returns they made on that were not taxable. So I think basically what's going to happen is that for those people who pay premium, in aggregate, and we sort of heard this earlier from one of the managing directors of the insurance company saying that if your cumulative premium is more than 5 lakh rupees, and whatever you earn on the incremental amount will be taxable. And the fine print says it will be taxed as income from other sources, which really means there wouldn't be any deduction available there. But it is going to become taxable now.
Okay, got that. So, Feroz, your thoughts on this? How big a hit will this be? Will this be really disruptive? Some of the products that were being offered, as Pallavi is also pointing out, they were being used perhaps by the high earners as an alternative to maybe fixed deposits.
Oh, see, I think it'll definitely impact because you can't have an instrument whose premise of existence is a tax arbitrage, right? So I think that going away definitely impacts both these which we have discussed, the MLD business and the endowment policies or all these insurance policies getting the tax exemption was creating a huge market for instruments on the basis of only tax arbitrage, point one. And insurance policies are the only instrument, financial instrument, where they lock in taxation at purchase. See, like MLDs, for example, let me try and highlight the point. An MLD bought in 2022 is still going to be subject to the new tax regime. So, but insurance policies, whenever there are changes made to insurance policies, there are always prospective.
Prospective. It's from the 1st of April of the new financial year.
So old policies don't get impacted. But MLDs, where the only premise was to get 10% taxation, is going to have a problem, not just prospectively, but retrospectively.
Is it going to hit a lot of people? Was it a very widely used instrument, these market-linked debentures?
It was a very widely used instrument because MLDs are two types. There is one category of MLDs which never use the tax arbitrage, which are the unlisted ones. Unlisted ones never got this 10% taxation. So those don't get impacted. In my estimate, this is 1 lakh crore industry, the listed MLD, which was a debt instrument with marginal changes in the return, getting the tax benefit. That's a very large industry.
I remember many years ago when I was in school, that was like a lifetime ago, there used to be a chapter called shares and debentures, right? Two different category of instruments. But I guess as we evolve, lines kind of blur. And that's what the taxman has been looking at. Ashish, let me come to you as well. On property, what is your estimation? Because now there is a cap. If I want to save on capital gains tax, I'm reinvesting the proceeds from the sale of one house into another house. The cap is now 10 crores. Not that I'm buying a house worth 10 crores, but do you think, again, this impact is going to be limited to the high earners? Your thoughts?
Yes, Surabhi, I think the impact is going to be limited to ultra HNIs. This was a nice, sweet deal for ultra HNIs where they could sell shares or they could sell property and reinvest it back into a new property. And you saw a lot of luxury house purchases over the last couple of years. That market really took off. So it's a bit of a dampener for those large luxury housing projects. But really, that's probably a very small fraction of the overall housing industry. So it's a non-event for the masses and the larger real estate industry. But yes, definitely those high-value residential projects do get impacted. I think there are a couple of months left for anybody who wants to take advantage of that tax benefit. So I definitely see a lot of activity happening in the next couple of months. But like I said earlier, it's a give and take in the budget. I mean, whilst they've reduced the surcharge for the high-income earners, made the personal taxation easier, they've also taken away a lot of the benefits that were out there.
Speaking about the high earners, Rajiv, let me take this back to you. I mean, for the longest time, there's been such a big clamor around this maximum marginal tax rate of almost 43%, right? Now it comes down to 39%, but if you're switching to the new regime, do you think there will be takers?
I'm sure there'll be takers, and it also sets the direction. I think the fact that in the speech, the Honorable Finance Minister recognized that the 42.7% is one of the highest tax rates in the world for individual. And if that realization is there and we started the journey of reducing it, I think that trend is an encouraging trend. Whether immediately this year people will switch or they'll switch next year, it's a choice that different people will make depending on what the circumstances. But I think to me, it's a good message that even those rates, which were supposed to be punitive rates, and nobody really, cared what happens to HNIs, I think that fact that rate also needs to be relooked at, to me, is a very comforting thing.
Are you making a point?
Yes, Surabhi, I would say that anybody in sane mind will switch.
Okay.
Why? Because the disadvantage is 40,000. The advantage is 20 lakhs.
Oh,
Okay, because 5 crore reduction of 4%, 3.74% to be precise, is 18 lakhs of gift. To anybody who earns more than 5 crores, if you reduce his tax by 3.74%, if you compute it, it's up to 18 lakhs. If I stay in the old regime and use all my deductions, at best I get 50,000 rupee rebate.
that's a straight maths for you.
And if people are not
50,000
doing...
versus 18 lakhs, I guess we know what people will choose.
And the second part is, I'm glad that the ministry took note, because there has been a huge flight of high earners to Singapore and Dubai over the last few years. And I think we were losing, not gaining by this 42.74.
Okay, before we come to last thoughts, I'll take it back to the tax experts. Rajiv, anything else? I mean, we've discussed quite a few of the headline announcements. Anything else on direct taxation, or maybe even indirect taxes? I saw some tweaks on duties on, I think, TV panels and things like that, cameras, etc. But anything else that really stands out that impacts our day-to-day life?
So nothing material there. I mean, of course, there are changes. There are very sector-specific changes. Something on the online distributors, something on some rationalization on GST, which is incorporating the decisions made by GST Council. But nothing that needs to be highlighted at large. It will impact few people here and there. The process of CKD kits of cars coming in goes up by a few percentage points. So there are some tinkering, I would say. Generally tinkering in the customs, nothing material, nothing substantive. No trend is emerging, which we need to talk about on indirect taxes.
And we, of course, on the direct taxes and capital gains, I mean, well, we'll have to wait another year or several years. Still, there's a change and a more rationalization, more rationalization and harmonization of those multiple tax rates. Pallavi, final thoughts from you from a tax standpoint?
I think one thing that we must sort of commend is the effort to try and make compliance easier. There was a mention of a more simplified form, in the offing, that they're sort of going to expedite the appeals by getting some joint commissioners. I think that's a good move. The only other thing I'll probably highlight to people is, they've introduced, it was always there. There was this deduction of tax when you made remittances under LRS. It used to be 5% if you sent money abroad for, tour packages or whatever, if you were remitting money. They've now taken it up to 20%. So I think this also links back to, our current account deficit, which we are trying to manage, and, sort of not wanting to encourage people to send money abroad. But I think this is something for most of us who are paying, sort of supporting students, children who are studying abroad and stuff. I mean, this is something to look out for.
Okay, got that, noted that. Ashish, let me come to you as well for final thoughts. And beyond some of the bigger announcements, let's say insurance, those who have been buying these policies for purposes that we have discussed, beyond the insurance piece, what else changes? What else would you watch out for as the new fiscal approaches?
Yeah, so like I said, I think the fiscal maths was very encouraging and very realistic. I mean, if you look at the disinvestment number, they've just pegged it at 51,000 crores. Normally, they start with a big number and then you always end up underachieving. So I guess they've started with a moderate number, and if they do better than that, it's great. So I think the entire fiscal maths looks very realistic, which means that the large borrowing program of the government might still sail through. Although I think we'll still need to see how who will support the borrowing program, because normally insurance companies are big buyers of government securities, and now with the changes in the taxation and insurance, we'll have to see how that changes. But overall, and I wanted to add that point, I think I'm glad she added it, that this LRS, they've increased the tax from 5 to 20, and basically they are increasing the friction for somebody to send money outside. And at the same time, if you just look at the philosophy, I mean, on the ultra HNIs, they've reduced the surcharge. So essentially, they have taken note of the fact that there was a lot of money going out of India for investments, and there were a lot of ultra HNI family offices that were moving out of India and setting up base elsewhere where the tax regime was better. So I think they've taken note of that trend and tried to increase the friction for somebody sending money outside. But all in all, Surabhi, I think, it was a good budget. I think there was something in it for everybody, right from, retail investors, where they've increased the tax slab, they've introduced standard deduction. So there's more in the hands of investors. Similarly, for ultra HNIs, they've given some relief on the surcharge. and overall the maths looks good. So and there's no tinkering with the capital gains tax, which is always the scare before any budget. So I think it's a great budget, and for people tuning in now, if they're looking at markets, I just want to tell everybody the markets is not a reflection of the budget. There are extraneous factors which have pulled down the market today. So all in all, the budget is good.
Okay, got that. Well, thank you very much to all of you, lady and gentlemen, for demystifying a lot of the announcements that came in today, and also sort of allowing us to see how we can plan our money and our finances now that this big event is behind us. So thank you very much, Feroz, Rajiv, Pallavi, and Ashish. Great talking to you, as always. Thank you, viewers, for joining in and staying with us on this conversation.